Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, June 25th. We are now in the final hour of the market. As many of you know, I believe that the prices of the day that are as close to the close as possible are the most valid prices. I feel like the professionals move the prices at the end of the day to the appropriate price, the most valid price of the day. And that is why I prefer to make the majority of all my trades, my entries and exits, based upon the closing price, because I feel it's the most valid price. It gives us the best information. So, all right, let me just see and make sure I'm coming through with everybody. David Gordon Russell, hey, good evening to you. Nice to see you, David. Thank you for coming by. And there's Johnny. How you doing, Johnny? Good to see you. Thank you for coming by as always. I do appreciate it. So how's everybody doing today? So the market's down, well, it was down more a minute ago. So the Dow's down 143 points today. The Nasdaq's down 111. That's a pretty big day on the Nasdaq. And the S&P is down 22.47. So yeah, the Nasdaq is definitely taking the brunt of it. We had some Fed minutes come out. I think that's kind of what spooked the market. So anyway, it is a down day. The market doesn't always just go up. So, we're just going to have to navigate it the best we can. All right. So here's the plan, as usual. First of all, we have to run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at all my positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them going forward. Then we are going to, after we get done with that, we're going to go through my watch list. We're going to take a look at each stock. We're going to look at support and resistance levels. We're going to look at moving averages. We're going to look and see if there's any possible setups for me to take at the end of the day. And if there is, of course, I'll explain exactly why. But we'll go down through the list. We'll mark a few possible candidates, and then we'll narrow that down even further towards the close. And if there's anything good, we'll go ahead and we'll take it. And then if any of you have questions about anything I've discussed during the podcast, please let me know. I'm happy to try to explain anything that you don't understand, or if you'd like me to take a look at one of your stocks, or you'd like me to take a look at something you're watching, I'm happy to give you my opinion on that. So that is the plan. Hey, Andy, good to see you, Andy. Good. Thank you for coming by. I appreciate it. Thank you. So, all right. So with that said, let's go ahead and run the U.S. legal disclaimer, get that out of the way, and I will be back in about 40 seconds. So hang tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. So yeah, kind of a crazy day. Especially on the NASDAQ. The NASDAQ's given back quite a bit today. So let's go through, take a look at my current positions, and we'll get started. All right. So here is MasterCard. I did buy MasterCard back here on the 19th of June. And the reason I bought it is because previously we had this nice up move. We came back down, which is totally normal. Anytime you get a nice upward movement, there's going to be some profit taking. The key is that it doesn't come down too hard too fast. And we did come down. We got back into the value zone. Now remember, the value zone, anywhere below the 1 ATR and above the negative 1 ATR is what I consider the value zone, because it's less than 1 ATR away, standard deviation away from the mean, or basically the middle of the channel. So, this is totally normal to have an up move. It's totally normal to come back having a pullback. The old saying, buy the dips, sell the rallies, or sell the rips. Well, that's what we're talking about. This is totally normal to go above value, come back into value. And then what we had is a nice V2 entry trigger here. And a V2 entry composes of 3 bars. Day 1, day 2 has to wash out or go below day 1's low by at least a quarter of an ATR. Then the next day, it has to close above day 1. So day 1, day 2, day 3, day 2 washes out day 1, day 3 closes back above day 1 within the channel at a decent RSI level. It wasn't too high. I think it was like 52, 53. So any reading above 50 shows some upward positive momentum. That's why, that's one of my filters, is I like, not on all trades, but a lot of trades, I like to see it 50 or above. Once it gets above 60, then it gets a little high. So that sweet spot in there is 50, 60. So move up, move back into value. The V2 entry signal triggered me into the trade. The next day had a monster day. It took off. I hit 3 profit targets that day. So I hit 36% of my position I was out of. Then we moved sideways. I did hit 1 profit target yesterday. So I'm out of about 48% of the position in a profitable area. Now today, it's pretty nasty, right? But again, the reason I like to phase out is because this happens a lot. Sometimes it will just keep going up and moving up, and you thought, why did I phase out? I would have made so much more. And it's true, but stocks don't always go up, everyone. They go up, they come back down. That's why when the market does give me something, when it gives me some profit, I like to take a portion. Not all of it. I want to keep the majority of it in case it does have a big move, because you need those big moves, to pay for all your little losses. But the point I'm trying to make here is, now I'm slightly under my entry point, right? 260.39, it's 259.75. I will definitely be getting out of this trade today, because we took out the low the previous day. We took out the 5, we took out the 10. It's holding at the 20, which is good. But my plan, even a few days ago, was I'm going to get out with a close under the low of the previous day. So did I make money on this trade? 100% I did, because I basically took out 50% of my position up here. And now, I'm taking this much loss on about 50% of my position, but I made this much gain up here on 50% of my position. So I certainly will be getting out of this at the end of the day. But again, it's a good, nice, profitable trade, even though now it's down below where I bought it. So I hope that makes sense. We also did short this here. I don't do a lot of shorting, but this did look good to me. We went up above the 3rd ATR channel, and we closed back below. We went to the 70 RSI level, closed back below. So I did take a short here and made the short money on the way down. And then when we had the reversing signal, I went long. So it's been 2 good trades, a short trade on MasterCard here and a move back up here. And we got into the long side of the trade because of this V1, V2. And by the way, I did do a video this weekend on my YouTube channel about how specifically information about using V1s, V2s, what they are, how to use them, what, some small nuances of what makes a great ATR, what makes an okay ATR. So that's on my YouTube channel, and I also posted a link of that video in the description of this video. So if you have some time, I think it's well it would be well worth your time to watch those videos, because V1s, V2 are such an integral part of my trading. So anyway, barring some kind of miracle from MasterCard today, I will be getting out. But again, it is a positive trade because of the phasing out aspect that I use in my trading. All right, what else do we have? So the Qs. Now, I did buy the Qs back here on the 4th of June. And the reason I bought it was because there's a good quantified back testing approach to long-term approach to trading the Qs, and that is staying out when it's under the 200 or the 250-day moving average, just staying out of it, and staying in it when it's above, on a closing basis, above the 200 and the 200-day 50-day moving average. So I did buy this back on June 4th. I bought it because the previous day it closed below the 200 and the 250, then it closed back above. In addition, we had a nice V2 signal, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. You find these V1s and V2s all the time, but the best entries are where you have multiple signals. And I had lots of multiple signals here. Under the 200, under the 250, back over the 200, back over the 250. V2 entry. We had a close under the third ATR channel, over the third ATR channel. Remember, about 90% of all prices stay above the third ATR channel and below the third ATR channel. So in this area, so this, when it goes down here and tests this area and then immediately reverses, now that's always a good sign. So in conjunction with all the rest of the trades, you can see this has been a monster trade. I have phased out, phased out, phased out, phased out. I only have about 15% of my position left. So, we're down 1.63% today. I mean, this really doesn't concern me because I only have 15% of the position, but this is a trade that I designate a mechanical trade. And, if you're trading this strictly mechanically, like I am on this chart, I'm going to stay in this until either I run out of shares or I'm phasing to the upside, or I close back below here. Maybe we're going to go straight down and I'll have to take a small loss on that 15%. I kind of doubt it. I'm sure we'll have some kind of bounce or rally or something that will take me out of the rest of the position. But, one thing I do want to notice here, you see this previous high over here? Well, this once acted as resistance. Then we finally broke above the resistance. Well, now the previous resistance should act as support to the downside, but you can see today we are underneath that support. Not such a great sign. So anyway, this is a mechanical trade. I'm not too worried about it because I have such a low position size, but it's been a monster trade so far. But boy, there's really been some volume, and there's really been some supply coming into this market. The distance between here and here is 1 ATR. The distance between here and here is 1 ATR, or here and here is 1 ATR. Whenever you get a bar that is larger than 1 ATR, it means that there's a significant amount of buying or selling coming in. If a bar is within the range of 1 ATR, that's just average. That's what is to be expected. But when you get a bar, the range of a bar that is larger than your average ATR, it means it's taking an extraordinary amount of buying or selling to do that. And you can see this is getting close to a 2 ATR range at this point. So, I don't know if the market's telling us something here. It certainly is actually, because this is a large range bar on higher volume. So anyway, that is the QQQs. All right, well, the SPY. All right, so as many of you know, and in case we have some new listeners today, I'll go over this quickly, but I do buy the SPY every day at the close, and I sell it the first thing in the morning. And I do it based upon this study. This is done by @Bespoke Invest by Liz Ann Saunders. And the study goes like this. Since 1993, if you would have bought the SPY ETF on the open and sold it on the close each day, you would have actually returned a negative 5.2%. But if you did the opposite and bought on the close, sold on the open the next day, you would have returned 568%, meaning more than all performance came in after hours trading. It's pretty amazing, right? I mean, it's pretty powerful. I mean, what's that is telling you from 1993, all the gains in the market have come in the after hours. They've come in the after hours and the pre-market. The prices have been bid up and then they have been sold into on the open. And you can see the line here. The green line here is the buy in the afternoon, sell in the morning. The red line is the buy in the morning, sell in the afternoon. So, if you're a day trader, this is clearly showing you that the moves in stocks come in after hours. So if you're only trading from morning till afternoon, you don't not have a lot of upward movement. It doesn't happen during the day. It happens overnight. So that is why I buy each day at the close, sell it in the morning. This was to 2017. This was to January 2019. And the return for the buy in the morning, sell in the afternoon went from negative 5.2 to negative 13. And the return of buying in the afternoon, selling in the morning went from 568 up to 634.2%. And then Stephen Burns, friend of mine, famous author, famous trader and educator, he did a more recent study up till about a week ago where the return of buy at the close, sell in the morning was actually 712.63%. So there's a huge edge in holding overnight, whether you're doing the SPY in the evening, selling it in the morning, or just literally holding your positions overnight. There's an edge in holding overnight. And I know day traders, they like the fact that they don't have to hold anything overnight, but in reality, they're essentially shooting themselves in the foot because that is where the edge comes from. And then Stephen Burns did a study based upon UPRO, and UPRO is the 3 times leveraged SPY. So it's 3 times the movement up or down than SPY. He did this from 2009. Same approach, buy in the afternoon, sell in the morning. And based upon UPRO, since 2009 to 2019, about 10 years, a little less than 10 years because this is a partial year, actually returned over 900%. So just another confirmation that, holding overnight is where a lot of edge comes from. So that being said, I did buy the SPY yesterday at the close at 293.60. I sold it basically break even. I think I made like 3 cents SPY cents on the trade. So, but you can see I am really glad that I sold it at the beginning of the day, not at the end of the day. So I will be buying this again. This was essentially a break-even trade, but you can see this the last month, buy here at the open, or buy at the close, sell at the open, buy at the close, sell at the open, buy at the close, sell at the open. Been really, really positive. I've been doing this since February 26th, and I definitely have a nice track record at this point with using this approach. So I am sold on this. The important part is that you use a proper position size. You do not use too large a percentage of your capital to do this because there are significant drawdowns. You have to be careful. I mean, I had a huge drawdown in May, right? But luckily I used a proper position size, a 5% position size, a 10% position size. Just think of this as a long-term trade that you have to make 2 clicks every day. So, all right. So I will be buying the SPY at the end of the day. All right. Here is Verizon. I did take a prior trade on this back on the 14th of June when we broke out above this fractal. A fractal is a high with 2 lower highs to the left, 2 lower highs to the right. It did go against me. My initial stop was the 5 and the 10 EMA. It did close below, so I did take a loss on that position. However, I did re-enter the next day when we formed this V2. Day 1, day 2, day 3, day 2 washed out day 1, day 3 closed above day 1. But you can see this has moved profitably since I have bought that. I did hit one profit target yesterday. Today we are down, but not too much considering the market. So I have taken a few, at least one profit target off the table on this position. So about 12% off. So I will be holding this. I do like that the moving averages all clustered together here. Now they're starting to fan out. That means it's starting to move our way. You know, what would be, how am I going to manage this to the downside? Well, it really hasn't moved far enough for me to tighten up my stop. If we had another thrust up day, I would then tighten up my stop. But probably at this point, probably the 10 or the 20 is what I would use right now today. But if it continues to move up, I'll start to tighten it to the 5-day moving average, or possibly a close below the previous day low. So so that is it. And then also, I do sell puts, and I did sell a put on AMD down to $24 for July 19th. So if the price stays above $24 by July 19th, I'll make my full premium. But I just wanted to show you kind of the thought process of why I picked $24 to sell my puts at. So I picked it because on the monthly, we should have some support at that top ATR channel and the 10-day moving average. So, this is okay. It should find some support here. But then if I go to the weekly, what I really liked was I liked the support at the weekly. We have the 50-week moving average, and we have the -1 ATR channel. So there should be some support there. In addition, there was some support in here. And then also you can see the 50-week moving average did act. There was some real support at the 50-day. So I always like to look back and say which moving average really was the market respecting. Was it the 20? Not really. It was above, below. I guess at this point it's respecting, but really the last major respect came at the 50-week moving average. So that is again why I picked the 50-week moving average and the $24 price as my stop, or as my strike price. And then on the daily, the 30 RSI level is down here at the $24 price as well. So I have some confirmation of the 10-day on the monthly chart. I have confirmation of the 1 ATR channel and the -1 ATR channel and the 50-week moving average. And then I will also have confirmation of 30 RSI down here in the 250-day below it. So all that being said does not mean anything. It could go down there and blow through there. But, looking at this objectively, I would not mind owning AMD at those prices. So if it gets there, I'm responsible to buy it, but I don't mind buying it there. If it doesn't get there, I'll make the full premium. So, I like to use different approaches. I like to vary up my profit centers of trading. I have my discretionary trades. I have my trend trades. I have my overnight SPY trade, and I have my selling puts that I also do. So it's important, just like it's important to have a variety of different stocks, not have too many positions in one particular industry. It's the same with my trading. I like to use a variety of trading approaches, and because I feel, in my experience, it helps even out the drawdowns, and you're just more diversified with different approaches. So let's see. Andy says, looks like Verizon had V2s in a row. Let's take a look. It did, Andy. We had the V1 here. And if you remember, I was supposed to get out here, but I missed it at the end of the day. because it closed under the moving averages. And sometimes it happens, and what are you going to do? But if you remember correctly, I said it's setting up for another V2. So even if I had gotten out of the position here and not missed it, I said if it triggers the V2 again, I would get in the trade again. I didn't have to because I missed getting out, but had I gotten out, I would have gotten back in here again. And you're right. And sometimes that does happen. You get a couple V1s in a row, a couple V2s in a row. And if everything looks good on the chart still, I always take that second trigger. A lot of times the second trigger is the one that goes. All right, so let's see where we're at. So the Dow's down 160, the Nasdaq's down 117. That's a big day. That's 1.5%. All right. So listen, before we get to the watch list, I like to look for people that post tweets or articles about the psychology of trading, because in my opinion it's the most important part. But here's Dan Zenger. Dan Zenger is a famous technician and teacher, at Dan Zenger on Twitter. But this did really speak to me because this is such a big part of trading, everybody. For those of you who can't handle small losses on a regular basis, find another interest. Paper cuts are a necessary part of the game. And it's so true. In May, we had this nice up move. Everything was going well. Everyone's used to making money day after day after day. Well, that's not reality, everybody. I mean, it happens. There's a certain time of the year where it happens, but probably the majority of the time that you're trading, you're going to be breaking even, back and forth, little gains, little losses. And then, the times of the month that you really make the most of your money is probably like 3 months of the year. The other times you're losing or you're breaking even. So, don't get discouraged when you have losses. The key is keep them small, right? I mean, I talk about that all the time. For profitable trading, you have to have large wins, small wins, or scratch trades, and small losses. You're going to have losses. There's no way around it, but you have to keep them small. But some people just can't handle it, right? I mean, if you get frustrated every time you have a down day, this is going to be a tough gig. Just look at your losses as your cost of goods in any business. You sell something, you have to buy something to sell something, and you have a cost for it, but you still make money because you make more on the profit than what you bought the cost of goods at. So you're going to have losses. Just get used to them. It doesn't mean you're not a good trader. Some of the best traders in the world, trend traders in the world, lose probably 65% of the time. I mean, that's tough, right? But they still make money because their wins are larger than their losses. So just remember, you're going to have losses. It's totally okay. It doesn't mean you're not a good trader. It doesn't mean that your system's bad. It's just a regular part of trading. PC, hey. Can't find ATR channels in trading view indicators. Is that specific to your trading platform? PC, you might want to look under Keltner channels. Keltner. Keltner channels. I'll show you real quick. In my trading, see how I have here Keltner lower band, Keltner upper band, Keltner lower band, Keltner upper band. It might not be under ATR channels in your platform. It might be under Keltner, but I'm pretty sure most trading platforms, I've never seen one that does not have either ATR channels or Keltner channels. But I have a feeling if you search under Keltner, you'll find them. So I hope that helps. What platform do you use, PC? Hey, Mount Doji. How you doing, my friend? Good to see you. Thank you for coming by. Sorry I'm late. I was on a call for work. Well, I hope you brought a note. Did you bring a note for your tardiness? Hey, sometimes you got to do your work though, right? Oh, Trading View. I'm not familiar with that one, PC, but look under Keltner. I think you'll find it that way. All right, well, let's go through and see if there are any setups for today. All right. All right, well, let's take a look at Apple then. So Apple is having a tough day. You see this high over here? This was resistance. Then we broke out above it. That should act as support. Today we are now down below that support. So that's, that's tough. I did take a trade on Apple here at a close above the 200. It rejected the third ATR channel. I did get out of it. So really at this point, I don't see anything on Apple, especially being that it closed below, currently it's below the previous high, which should have acted as support. Where would I be interested in Apple? Well, coming back down into the value zone might be a good location because time after time you go above the value, back into value, you go under value, back to value. So my favorite trades are taking trades within the ATR channels because they're closest to the mean. The sweet spot is the middle of the channel to the third ATR as far as ease of movement. The middle of the channel to the third ATR to the upside. So, I've mentioned this before, but when you start getting up into these ATR channel, third ATR channel range, it doesn't mean it can't go higher. It's just that the majority of time it does run out of gas there. Sometimes it just moves sideways and then resumes. But it's tough to get stocks above the third ATR channel. It happens, and some of the best runs come from those. But, just statistically, you do run into some issues up here, and that is what happens. So, getting back here into the value zone might be an interesting, possibly even at the 20-day moving average. We should find support at the top of the channel since we're above it. So nothing here today. But, let's keep our eye open on Apple, and let's keep an eye open to buy that dip in the value zone. So nothing on Apple. AMD, I talked about AMD, did sell my put down to here for July 19th. So if it doesn't get down to there, I get to keep the full premium. Amazon. Well, Amazon, big day today. Also, this was a previous support, moved up above our previous resistance, which should now act as support, and it lost it. So where would I be interested on Amazon? Same with Apple, somewhere back into the value zone between the 1 and the -1 ATR channel. We did buy Amazon back, it was right here actually, when it poked its head above the 200. We had 2 strong days on Amazon, so we had a nice little 2-day profit there. I also did buy back here on the 14th of June when we had the 550 EMA cross, was right here, but we held this for 2 days. I didn't like how it hit that third ATR channel and then rejected it, and then also we had the Fed meeting the next day. So this was another nice 2-day profitable trade. Then I got out of here because of the Fed meeting, which scared me off. So I was fortunate to have 2 nice trades on that. But right now today, it's a big bar. It's larger than 1 ATR. There's definitely some supply coming in here that's greater than noise, greater than 1 ATR. So again, if it starts moving sideways, shows that it's done with the selling, and then we have a V1, V2. Even in this area, I might be interested because we have the 20 and the top ATR channel there. But ideally, it drips down, move sideways when we get some kind of buy back here in the value zone to go back up and test. But who knows? We'll see. But there's nothing here on Amazon today for me. Boeing, you can see, it flirted with that third ATR channel up here, tried again here, came below, tried again here, came below, tried again 3 days ago, came below. So it is having an issue with this third ATR channel right now. So where would I be interested here? Back here where we have the top of the channel and the 200-day moving average. So back into here is probably where I would be interested. So, the point here is not to go, I think it's going up tomorrow, because you have no idea. So, pick a spot. Don't do anything until it gets to your spot. That's the key. Alibaba, as with others, we had this previous high. We took out the previous high, which was resistance. It acted as support, and we have now, it should have held here. It did hold there yesterday, almost to the penny, but now today it is closed back, or at least now it's closed under that previous resistance, which is now support. So the support did not hold. So on Alibaba, where would I be interested? Probably at this point, again, like the others, back here at the 200-day, which corresponds with the top of the 1 ATR channel. So nothing on Alibaba today. We just have to be patient. It's better not to take a trade unless you have a good trade. It's just like if you're a landlord, it's better to have that house vacant than to have a bad tenant in there, right? And it's the same with the trade. I know you want to make money. I know you want to make money every day. But if there's no setup there, just sit on your damn hands. Seriously, just sit on your hands and wait for a signal. You're better to be in cash than being impulsive about it and saying, I think it's low enough. You don't know. No one knows. Hey, Steve Burns is here. How you doing, my friend? Thank you for showing up. It's always like such a great honor to have you in our live stream. I know everyone loves it. Steve says, I always enjoy your chart reviews, Greg. Thank you, bud. It means a lot, really. It means a lot. Most of the time, I'm just teaching what you taught me. But thank you for coming by today. I really appreciate it. Mount Doji says, ha, ha, ha. I wanted to bring a note to my work, so I could have skipped that instead. Excuse me. All right. Caterpillar. Well, Caterpillar did close above the 200. It has stayed above the 200. It's fairly resilient today compared to the rest of the market, but nothing on Caterpillar. Canopy Growth. I talked about this yesterday. We have this low, we have this rally, we make this equal to low. We do have a bullish divergence, meaning that the first leg down had a deep MACD histogram bars. Second move down, we tested the previous low and we had a small MACD divergence to the downside. That's what Dr. Alexander calls a double bottom with a bullish MACD divergence. Now, it did trigger a V1 yesterday. I did not take this because here's day one, day two, day two washes out, day one closes above day one's close. That did happen, but one of the rules is the day number one bar cannot be larger than 1 ATR, and this is larger than 1 ATR. I don't like to get long against a previous bar that is larger than 1 ATR based upon what I just told you. It's larger than average. It's larger than noise. There was a lot of selling. So it did trigger. I said I was not going to take it. Good thing I didn't because it is down. Big picture though, I do kind of like this. If we got to about halfway of this bar here, I might consider getting in a long position because I would get in a better price. I would have less risk and I have more reward. So we'll see, but nothing today. Cisco, we're having a pullback into value on all the techs. And, it doesn't necessarily mean it's bearish and things are crashing to the floor. It doesn't. It just means that, we've had a nice run up, and coming back into value is a normal part of business, just like here, moved up back into value before it resumed its way back up. So the key is wait for it to get into value or at some RSI level or at a moving average. But then for me, I like to have a valid trigger to trigger me into the trade. The Dow. Well, the Dow is moving up, big picture, it is moving up, but there is nothing really today. We're threatening to close back into the value zone or under the third ATR channel, but there's really nothing on the Dow Jones today. Disney is back into value, just like we were talking about. Things go up, they come back into value. They go up, they come back into value. At one point during the day, this did trigger a V2 intraday, but I wouldn't take it up here because it's above the 1 ATR channel. So that's just one of my filters. I don't like to take a lot of V1, V2 trades if they trigger above the 1 ATR channel. Back here, we took a V2 entry back on the 3rd of June because we had a V2 trigger. Here's day 1. Here's day 2. Day 2 washes out day 1. Day 3 closes a bit above day 1's close. But see how it happened within the channel between the 1 and the -1 ATR. So, again, this happens in the sweet spot. It allows for easier movement than buying it up here. And so we did buy it here. We did phase out up to here, which was a really nice trade. I was waiting for a pullback, but I didn't get a trigger. And so I didn't get this second leg up. So the key here is, having this come back down into value, ideally washing out this previous low because there's going to be some stops in there. And if we could wash out those stops and still have the strength to reverse back up, that would be good. So, nothing on Walt Disney today, but, let's watch for it to come back down in this area. Etsy, well, Etsy has moved outside of the -1 ATR channel. Nothing there, certainly nothing there today. We could watch this if it gets into the 30-35 RSI range. Excuse me. Ford. I was watching Ford here. We made this move up. Now we are back into the value zone, right? Now, this is setting up for a V2 tomorrow. Here's day 1. We've certainly washed out. Day 2 is certainly washed out day 1 inside of the third ATR channel, which is nice. But let me show you a little trick here. So I can move these bars because of this feature I have. If today it did this, I would buy it because it would be a V1 inside the value zone. Move up, move back down into value. Bar started to narrow for a couple days. We wash out the previous day low and we close above the close. So if this happened today, this particular pattern, I would buy it. But unfortunately, this is what it looks like. So, tomorrow, if we closed above, tomorrow would be day 3. If we closed above day 1, it would trigger a nice V2 with a really good washout inside the bands here. So that would be of interest if that happens tomorrow. Conversely, if we go lower tomorrow and then reverse back up, it would be a V1 deeper into the channel. However, this bar is just getting to the point where it might be larger than 1 ATR. I guess not quite, but it's getting there. So nothing on Ford. We'll watch that in the future. Facebook did have kind of a big day down today, larger than 1 ATR, closing below the previous day's close. So nothing on Facebook, but again, where would I look for a possible entry? Maybe down into this range where we have the 50, we have the 20, we have the 1 ATR channel as possibly some support. But even if it gets down here, again, I need a trigger, V1, V2 trigger to get me back into the trade. So nothing on Facebook. Five Below. boy, that hit that fractal. You know, fractals work to the upside or the downside. I was looking for a fractal to the upside here, but it didn't trigger, but it did trigger this fractal. See the low with the two lower highs. I'm sorry, the low with the two higher lows, the low with the two higher lows above it. So, you know, if you're trading fractal, right here would be your short. Boom, that was a pretty good short. I didn't take that. So, you know, right now, we are at a 3340 RSI. You know, in the coming days, if we closed above 30, under 30 RSI and closed back above, and at the same time we closed under the 250 and back over the 250, I may take a position based upon that. We are working on a double bottom with the divergence as well. But nothing there today, but definitely something to watch in the next few days. Oh man, I've been blabbing on too long. I'm gonna run out of time. I'm sorry. Gold, you know, this is one of those formations where we are still higher than the close, but we are lower than the open. So this could possibly be bear signal, but nothing there. So I'm gonna have to run through these. Sorry, I got off on tangents. Google, no good. Goldman Sachs, no good. IBB, no good. I did buy here a quarter position because we took out this fractal, had a nice 2-day trade on it and got out. So that did end up pretty nice. Intel, nothing there today. IWM, did buy that here and it did dump on me yesterday, so that was a loss, but good thing I got out. It is down lower now. It's down even more. Coca-Cola, waiting for this to come back into value. Lockheed Martin, it's pretty strong. It's up today. You know, we did take this trade here. It's a good example of a V1. Day one, day two washes out, day one closes above inside the channel, and you can see that was a really, really nice trade. You can see why I like to take my trades in the value zone, because it gives me some room up to the third ATR channel. But nothing on this today. It is respecting the previous support of that previous high, but nothing there. MasterCard, definitely will be getting out of that today. 3M, it's down. Merck, you know, waiting for a move back into value. Microsoft, oh, goodness me. It's bigger than one ATR, everybody, right? That's almost 2 ATRs. There's a lot of supply that's coming in there today. Netflix, big day down, my goodness. It's coming back into the value zone though. So, you know, in the next couple days, if this can move sidewards for a while, stop the bleeding, find some support, then maybe V1, V2, that might be the place to get in, but nothing today. Nike, whoosh, big down day today, nothing there. You know, if we revisit the 200, maybe we can look at it there. Philip Morris, this was a recent trade. I did buy Philip Morris here when we closed back above the 10-day and we had this V2. I got out of about 44% on this big move up. And then yesterday I sold the rest at the close because it lost the 50 RSI. So it was a nice profitable trade. And then today it went up again. So, but that's okay. We did lock in some nice profits, two-day profits on that trade. If it closes back above the 200, I might be interested at that point. PayPal, like the other techs, just really going down, but we're into the value zone. So again, let's wait and see if we can get a couple days movement sidewards and then get a nice V1, V2 back into value, and then we'll target back up here again. Qs, we talked about that. This is mechanical, so I won't be doing anything with the Qs. Silver was up today, now down. SPY, whew, I'll tell you what, I'm sure glad I'm buying that at this discount than where we sold it at today. So I will be buying that today as well. Square, big down day, my goodness. Big down day. You know, this is a good example. We were lucky enough to buy it here. We had this bottom, rally, lower low, bullish, MACD, divergence, tested a new range to the downside, reversed back up into the old range, had a nice V2. In addition to the bullish MACD divergence. So we had a lot of signals here, and we did ride this one up. You know, I phased out, right, all the way up, but at the top of where we phased out at, from bottom to top, had a 14% move. So this is a great example of lots of different signals coming together. Lower low, bullish MACD divergence, V2 entry trigger, back into the channel, MACD going positive. So, you know, this was probably the biggest move of the year for me on one particular stock, and it started with a lot of indicators lining up. AT&T is just moving sidewards, nothing there. Bonds, you know, now we have a double top with a bearish divergence. We have a top, we go back down, we made a higher high. See how high the green bars are to the upside? See, we made a new high, no green bars to be found. That is a bearish double top with a bearish divergence. So, you know, currently we're lower than the previous high. If this rolls back over after a double top with the bearish divergence and get like a V1, V2 with the lower high short, I may take that in the coming days. If that happens, it may make a new high, and that would nullify the whole deal. Tesla, just moving sidewards. United, UNG, which is natural gas, had a big day yesterday, just moving sideways today. Oil, about break even. UUP, which is this dollar, you know, we broke that 100-day moving average. Now that we're under it, we attempted to test it today and failed. So probably this 100-day moving average is now going to become resistance above us. So really nothing there. Visa, big down day today. Same with MasterCard. Lost the previous support that used to be resistance. So that's not a great sign. VIX, you know, I mentioned a few days ago that we bounced off the third ATR channel. I mentioned that might be kind of a bad omen for stocks, and it was right. You know, I'm not psychic or anything. I just noticed that we had to bounce off the third ATR channel, and a lot of times prices bounce off that third ATR channel. So if the VIX is going to bounce, that's probably bad for the market, but that's up almost 3% today. Verizon, we do have, I will be keeping that. I just don't think it moved high enough for me to start trailing. So probably at this point, my trail will probably be the 20-day. Energy, back into the channel. One above the channel, third ATR channel, below the channel. XLF, at one point today that was a V1 intraday, and it's inside the channel. What I'd like to see on this, I'd like to see a couple days movement sidewards to give us the squeeze play, and then a V1, V2. So, you know, this might be 1 or 2 or 3 days away, so let's be patient. Real estate, oy, oy. But we moved outside of the channel. We went above value. We are now back into value after a nice up move. So, you know, let's keep our eyes peeled for some kind of trigger to go back to the upside, because this doesn't mean it's the end of the world. It just means it's coming back into value, and there's going to be some buyers here. You know, it's important to get into positions where you know other buyers are going to be coming in as well. It just makes sense. Utilities, nothing really there, and healthcare, nothing really there. So I don't see anything to buy today. I don't think we bought anything yesterday either. So, you know, just because you don't have anything to buy, don't get bummed out about that, because really it's showing some maturity in your trading. If you don't have anything to buy and you don't buy anything, that's a good thing. I'm telling you, that means that you're following your plan, and that means you're on your way. It really does. So we have 5 minutes. I'm going to go ahead and just get out of the positions that I need to right here. MasterCard.
Autofilled.
All right. And for Verizon, we're keeping. So that's really the only trade that I needed to get out of. And then I do trade a couple accounts. So let me get out of that one over here as well.
Order partially filled.
But you know, the thing on MasterCard,
Order
like
filled.
I said, this is, and it's always a two-way street, phasing and not phasing. And when it works for you, you're going to point it out. When you don't, you don't notice it as much, but doesn't mean one's better than the other. You know, like Steve Burns. Steve Burns does not phase out, but he does really well because he, you know, his psychology lets him to hold on to trades the full position as it moves up, which is really, to me, is a strength. My personality is it's really tough for me to hold something in a full position as it goes up and up and up. So I like to phase out a partial. Now, in the long run, which one's better? I don't know. I think it depends on your personality. I guess if I really had to pick one or the other, probably holding the whole thing, I think probably would edge out phasing. But the reason I use phasing is because it helps me stay into the trades, and I need those bigger trades to pay for my losses. So it's kind of a, you know, in between mode for me to phase out a little bit. It helps my psychology to do that, and it helps me hold on to larger positions like that. That square position. No way in hell I would have kept that for 14%. I couldn't have done it. But the reason I was able to hold on to it as long as I could was because I did phase out. So, you know, you have to base these things upon your personality and what's going to work. You know, we all have quirky personalities, so you have to find something that will work for your personality. And, you know, in this position on MasterCard, we made a profit on this, even though we're below our entry point. Pretty amazing, right? And that's one of the benefits of phasing. So, all right. So we are at a MasterCard. We have Qs. Verizon I am keeping, and so the only thing to buy here at the end is our SPY trade. So let's get that queued up. And then after the market closes, if anybody has any questions, please let me know. All right, so where are we? We're 166. Well, we have 3 minutes. Close to 2 minutes. All right. I'm just going to go ahead
Ordered partially
and buy
filled.
the SPY, get that out of the
Order
way.
filled. Ordered partially filled.
290.96.
Order filled.
290.96 is the entry. $290.96 is our new entry. So much better to get out up there today and rebuy down here, right? So I will be selling that first thing in the morning, but yeah, no trades today whatsoever. Got out of MasterCard. Q's is our mechanical. SPY we just bought. Verizon I'm holding because it's acting fairly well, and then AMD is the put that I sold. All right, so we're closing in 1 minute. Steve says, it is better to be in cash and wish you had a position than to be in a position and wish you had cash. That is awesome. It is so true, Steve. Absolutely true. Man, that's really great. All right, so we got about 20 seconds. Down day today, you know, not that bad. It's just part of trading, but you know, compared to the gains we've had recently, they're relatively small losses, and so you got to pat yourself on the back for that.
Order cancelled.
Yeah, that's it. So the Dow's down 177, Nasdaq down 120. Jeez, So listen, before we get into questions and answers, as always, I do want to put in my little plug, let everyone know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So, it does help to work with some one-on-one. It's great to read books and even this live stream, but it does make a difference when you actually are live one-on-one with the person. You can ask questions right when it happens. So I've had really good success with my students. I love to teach, and it generally starts out just with a phone call, just a free phone call, just to see if it's a fit between you and I. But I'd like to get some information about you, what your experience is in trading, your approaches to trading, what challenges you're having, things about your personality, and then I can put together a custom approach for you, using good back tested and good trading principles to hopefully get you on a path to be, a profitable trader. So, if that's of interest, my email is in the description of this video. My hourly rates are in the description of this video. So if there's of interest, if you have any questions about it, feel free to send me an email, or on Twitter, just reach out to me. So anyway, that's that. And then if you're enjoying this live stream, if you're joining the channel, I would really appreciate it if you would subscribe to the channel, and or hit the thumbs up button, and let Google know that you like this content, and it helps build the channel. There's a lot of people out there that really honestly have a very difficult time with trading. They lose money, they get depressed, they go into a downward spiral. Just like, it's just like people having issues with drugs, and you need some support. And some people just don't know what good trading principles are, and it's not that hard, right? As you guys know, it's important to keep your losses small, let your winners run. I mean, that's very important, but some people just don't know this. So, that's why I started this channel. I really wanted to teach people, because I've seen people really have difficult time with trading, and I want to help them. And that's why I started this channel, because I do have a lot of knowledge from my 24 years of trading, and I do like to share it with people. But really, I like to do it to improve people's lives and their financial lives. So that's why I'm trying to build a channel. So please help me, hit the thumbs up button, share it on social media, tell other people about it, and let's grow this, and let's help some more people. All right, Miguel, hey, how you doing? Miguel, boss, what criteria do you have to create your watch list? Liquidity and what more? Okay, that's a really good question. So when I create my watch list, these are my criteria. First of all, the stocks that I put on my watch list, I want them to be large cap stocks. I want them to be recognizable names. I want them to have institutional following, meaning that, large financial institution companies are following them. That adds liquidity, that adds support at certain price levels. So, that's why almost every stock on my watch list, as we go down through, I'm sure you've heard about it. I don't like to deal with, smaller stocks I've never heard of. I don't know them. I need to feel comfortable. So first off, large cap stocks, basically anything in the S&P 100. Second of all, I want a variety of different types of companies in my watch list. I don't want them to be all, Microsoft, Facebook, Google, Amazon. Well, you've heard of those. They have institutional followings and all that, but they're too correlated. They're in the same industry. So, I want a wide variety of different types of companies and industries, like the Dow Jones Industrial. The nice thing about the Dow Jones 30 is that you have the leader of every industry, whether it's tobacco, whether it's cars, whether it's technology, whether it's banks or healthcare. So the second requirement, make sure you have a diversified watch list. Companies in all sorts of different industries, not just one, so that you have diversification there. So those are my main two, right? Well-known stocks, they have institutional following. There's liquidity, you can get out. The bid-ask spread is very tight, which is important, so you don't have slippage on the bid-ask spread. And then a diversification of those type of companies, so that you have, autos, you have tobacco, you have airlines, you have healthcare, you have technology. So those are my requirements, Miguel. David Gordon Russell, thank you for doing the V1, V2 video. That was a great help. Was it, David? Good. I'm glad. I get a lot of questions about that. And they ask if there's, someplace they can read more about it. And, Kerry Lavorne, who is a mentor of mine, he's actually a trading partner with Dr. Alexander Elder. As far as I know, he developed them. And that, and I worked with him for about a year one-on-one. And, that's a key part of his trading, and so that's what he taught me. But I don't believe he has any particular type of actual book out. He does have his website. He does do private coaching and mentoring, kerrylavorne.com. But as far as something you can just buy to read on it, I don't believe he has it. One-on-one coaching, yes, but I don't think there's anything printed. There's something that he's published that I'm aware of. So that's why I did the video, and worked on the V1s, V2s, and concentrated on those just to help people, because they're a huge part of my trading. They're such a good signal. Miguel says, thank you much. It's incredible how good this channel. Oh, good. Thank you, Miguel. Appreciate it, my friend. That's nice of you to say. I'm hoping. I'm trying. And you saw the video as well. All right, good. Well, interesting day. Had a couple down days. Not too bad. It's just part of the game, everybody. Don't get down on yourself if you have some losing days. It's just part of it. So keep your powder dry, keep your mental capital in check. A lot of people, I'm telling you, they get 2 or 3 down days and their position size too heavy. It takes it out of you mentally. And then when an actual trade, a real trade, a legitimate trade comes along, they don't have the guts, or I guess the guts isn't the right word, but they just feel they just don't feel like taking it. They've been beat up. They don't want to beat up again. So it's a small nuance of trading, but it's very important to keep your mental wits about you. Don't get too down, and you won't get too down if you don't get beat up too bad. So make sure you have powder available and powder dry, so when you do get a position that comes along, you can take it. I can't tell you how many people just get beat up because they got into trades where they shouldn't, and they got beat up for 3 or 4 days, and then the trade comes along and they just don't have it in them to take the trade. So thanks, David. Cheers to you too, my friend. Hope to see you next time. Thank you. So anyway, if anyone has any more questions, this is the time. Otherwise, I'm going to get up in the mountains. But David Gordon Russell, thank you for coming by. And Miguel, thank you, my friends. Good seeing you. Andy, nice seeing you as well. Mount Doji, good seeing you, my friend. How are things going with the Market Wizards book? You still reading those? I hope you are. Steve Burns, thank you. Always an honor to have you in our group. Huge honor. Huge honor. And PC, good seeing you. Let me know about those Keltner channels, if you can find those on your Trading View. I feel like you should be able to, hopefully. Oh, great. Thanks very much. Found the Keltner channels. Well, there you go. Good. And then Johnny, good seeing you, my friend. Good seeing you. And I think that's everybody. No Dr. Jorgensen today. He's down looking at houses. So, all right. Well, listen, hopefully see everybody tomorrow. If you have any questions that you didn't remember today, feel free to send them to me on Twitter or my email, which is in the description of this video. So, All right. Well, have a good rest of your day, everybody, and hopefully see you tomorrow during the last hour, and we'll see if we can navigate this market. It should be interesting to see what's going to happen tomorrow. Oh, Johnny says, I had a nice 14% trade on MDR. Other than that, leaving my money on the table. MDR? What is that? MDR. McDermott. Wow. That's awesome. When did you buy it, Johnny? When did you buy it and why did you buy it? That's the important question. That's a monster trade. Oh boy, oh boy. Well, maybe Johnny left, but regardless, I'm really glad that you had that trade. That's awesome. Maybe tomorrow we can talk about it. I'd be interested to see where you entered this trade and why. But good. Congratulations. All right. Listen, on the way out here, I'm going to play the U.S. required disclaimer. And, oh, Johnny says 18th and don't remember why. So the 18th. Well, it did take out the fractal back on the 13th. That would be one potential. It did barely take that fractal out. But regardless, man, that's a super, super sweet trade. Are you still in the trade, Johnny? It did test the 70 RSI today and did come off. So personally, if I was in the trade, that would be my signal because we tested the 70 intraday and rejected it and got back out. But all right, well, thanks for sharing that with me, Johnny. And yeah, feel free to share your trades with me, everyone. I'd really like to get an idea of how you're trading, how it's going for you, what entries you are using. He said no, sold it. It had dropped very close to my value zone. Okay, good. Well, sweet. 14% is one hell of a trade. All right. Okay, everybody. Good seeing you. Thanks for coming by, and we'll see you hopefully tomorrow during the last hour of the market. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.